Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello and welcome back to another episode of the News and Views podcast. It might sound a little bit different today because Polly isn't here with us. It's just me and Tom. So, Tom, how are you doing today?
I'm doing well. Like you said, we're missing Polly today. So we're going to try and trundle through the podcast, get you all the information that you need. But yeah, I'm quite good. I feel like the last week has gone pretty quick. Things are starting to slowly heat back up again in terms of how much news we're getting in. And yeah, it's been a good week and it's slowly getting back up to speed in the new year.
Yeah, I definitely agree with that. I feel like we've had a lot of interesting and unique articles go out this week and it's been pretty interesting. I feel like the start of the month really felt a lot quicker. I feel like the last couple of weeks have really slowed down a bit now. I don't know if it's just everything's catching up. As you said, sort of everyone's getting back into the rhythm of things now. But let's talk fintech today. What article are you bringing to the table?
So today I'm going to be talking about how Wise UK is urging for more transparency in exchange rates as 150 billion hidden fees are revealed.
Very nice, very nice. And I will be discussing sort of a more general topic and in line with our monthly focus in January, which has been AI. And that's really, is the AI hype, going to die down or is it here to stay? So be interesting to see, the future of the technology this year. But why don't you go first?
Absolutely. So, as I said, Wise are urging for more transparency. And it's basically saying that UK banks specifically should be more transparent about their exchange rates because it's revealing a widespread use of hidden fees by some of the most well-known high street banks. So, according to research commissioned by Wise, consumers lost £180 billion globally in a single year due to hidden fees alone. Just showing that banks are significantly profiting from customer confusion and industry opacity. And because of this, Wise says it's basically renewing its long-standing call for banks to be transparent about their FX fees. So Christo Carmen, who's the CEO and co-founder of Wise, explained that over the past 13 years, Wise has been campaigning in this area, but revealed that not much has changed from banks voluntarily. And he basically explains that they're still hiding their markups, they're refusing to be transparent because they're gaining so much from hiding the fees that their customers have to eventually pay. And he basically says that not all people and business owners have the time and desire to calculate the hidden margins that they're being charged. So sometimes people are being charged it over how many years and they never even notice that they're actually overpaying what they originally thought they would be. So through its research, it basically revealed that HSBC currently charges the highest fees or hidden fees with 3.7% hidden markup. Basically, Wise suggests that although the bank recently launched Zing, which is its new product that is transparent about its fees, it does not offer this transparency to its existing customers with its older accounts. And new industry research by CensusWide surveyed 1,000 Brits nationwide and found that only 22% of Brits think that their bank gives them a fair deal across products and services. However, there are some banks that seem to be doing a little bit better. According to Wise's study, it notes that Starling and Monzo are completely transparent about their fees, as well as the new product Zing, whereas Barclays and Lloyds are so-called play acting at being transparent by offering a hard-to-find disclaimer that details the hidden fees as a markup. So I thought this was just interesting because a lot of the time we talk about how strict the regulation is in banking in this country and across the UK. And I find it interesting that some of the biggest high street banks, namely HSBC, Barclays and Lloyds, are really engaged in this sort of predatory behavior when it comes to hidden fees and almost openly hiding fees in its like hard to find disclaimers and terms and conditions. And really, I just want to get your first initial reaction to this. Firstly, as a consumer, do you think it makes you less inclined to deal with the likes of HSBC and Barclays? And do you think there needs to be more of a crackdown?
My initial response to this was, I can't remember which article it was, that I worked on or that we discussed on the podcast, but we were speaking about how consumers are really struggling to have or trust their banks really and certain financial institutions. And when you hear stats like these, it's really no surprise. It really does seem predatory in that these huge firms are really exploiting their consumers almost. And it doesn't surprise me in the slightest that I know it's been a few years since neobanks really exploded onto the scene and really took the world by storm, I suppose. But it doesn't surprise me that the likes of Starling and Monzo are still so popular with consumers, and why there has always been this, well, not always, I should say, in the last few years, we've really seen this move away from traditional high street banks. And this has got to be one massive reason for it. It's just a transparency and a level of trust that's created between the institution and the consumer itself. I think when you look at startups or family run businesses or whatever it might be, when you see these small firms, or not firms, when you see these small businesses grow, they do create a relationship with their consumer for the most part. And then that's what brings the consumer back. And I think when you've got such a large organization like HSBC or Barclays or whatever it might be, understandably, it's a lot harder to create that sort of connection between the consumer. But I think it's something that's really important and has to be done. And even though it's only a small thing, so just at least being clear with the fees and what people need to pay is a way that they think, oh, okay, I can trust this organization. And I think it's for the article that I'm thinking of is firms going, people going to to banks, to fund their startups. I think it might have been last week or the week before that we discussed how a lot of people were getting their loans from friends and family. And it really goes to show that why would they trust someone that's going to sort of mark up their initial loan or along those lines? Or even if we're talking about sort of payments and then loans are a slightly different thing. Regardless, it all gets bunched together and it creates this feeling of, I don't trust you, therefore why would I go to you when I need help financially?
Yeah, I completely get that. And I think also it's like you mentioned, it's the fact that the ones that are transparent seem to be these challenger banks that really recognize the importance of gaining the trust of the consumers. Whereas I guess the high street banks can afford almost to have this attitude of, well, we can sit back, be almost less trustworthy in the sense of being transparent because they've already gained the trust over however many years, decades that they've been operating in the UK. But I think there obviously needs to be a change because the whole reason Consumer Duty was introduced was to ensure that all information like this is easy to access for consumers. They're given the best ability to compare between products and services. And I think it's a really interesting point that it hasn't really reached banks in this respect. They're still not cracking down on these kind of hidden fees, putting them in hard to find disclaimers that people wouldn't necessarily look at when they're initially comparing between accounts. And I think clearly there needs to be some sort of crackdown because having fees that are hard to find and hard to understand for a lot of consumers surely isn't acceptable in a place where Consumer Duty exists and is trying to do the exact opposite of that, but doesn't seem to be quite reaching this area. So I think it's quite a disappointing finding from Wise, really, but an important one to bring to light because I guess the more people that know that this is the case, the less people are likely to choose these banks which have the hidden fees and therefore, move over. Something we've worked on today, actually, as a story, was the current account switching service, which revealed that Q4 of 2023 saw its record number of switches between bank accounts in the UK. And I think it just shows that more and more people are recognizing how easy it is to switch away from one bank to another and realizing the benefits. And this is the type of thing that perhaps the challenger banks are going to really thrive off because they recognize that being transparent is what is going to build the trust, like you were speaking about. And hopefully, it will create a more open and transparent banking environment for the whole of the UK. And even if the regulators don't force the high street banks to get involved, these high street banks will think, well, in order to regain the trust of consumers, we now have to be more transparent in all operations as well. So, all in all, I think it's an important story to cover, and hopefully, the future holds a bit more transparency in banking. But with that in mind, how about we move over to your article, Francis?
Yeah, cheers. I think it'll definitely be an interesting space to keep an eye on. Speaking of interesting spaces, the AI development is definitely, or artificial intelligence, it's really taken the world by storm in the last year or so. It's been the latest trend that I don't think you can really go anywhere without somebody sort of mentioning AI and what they're doing in the space. And it's almost become a buzzword that if you don't mention it, you're going to be viewed as somebody that isn't really with the times and is really falling behind. But what we wanted to discuss at the Fintech Times was if this was just a hype train or if it's something that's here to stay. Because I think when we look at NFTs, for example, a couple of years ago, they really took off and everyone sort of seemed to believe that NFTs were going to be the next big thing. According to some stats from Statista, in Q4 2021, there were nearly 2 million active NFT wallets, but by Q3 2023, this number had dropped to 227,000. That sort of drop off is very, very sizable, and it really has impacted the NFT market in the sense of how people are or view it now. It's not something that really people are thinking, oh, this is still in a space that I want to get involved in. People are thinking, no, it's just a waste of time and potentially even money. So with that in mind, it got me thinking as well, is artificial intelligence going to share the same fate? So we reached out to the industry and we had a variety of different experts, I should say, come back with their views. And a lot of what people were saying was that this is still only the beginning of artificial intelligence and that 2024 has a lot more still to happen for it. And a large reason for this is the accessibility of the technology. That's what a lot of people sort of kept coming back to and saying that because AI has been around for a while now. It's not something that's just emerged when ChatGPT came out. It's been around for a much longer time. It's just the accessibility and how to implement it into the organizations and its what stage it was along in its development cycle. It really didn't lean to mainstream adoption. However, with the release of ChatGPT and sort of the exploding response as a result of that, a lot of organizations have now looked to how they can implement it. And as such, firms or AI firms have made sure that their services are easier to implement. So what I really wanted to discuss with you simply is, do you think AI is on a hype train or is it here to stay? And, do you agree with those people that are saying it is accessibility that's really enabled its growth, or is it something that's going to stay but the hype is going to die down?
I think from hearing about AI, like you said, basically throughout the entirety of 2023, obviously we got ChatGPT at the back end of 2022, and that really drove the hype that we're talking about when it comes to AI. But I think it's important to realize that, and I think most people have, that AI is definitely here to stay in terms of how it's revolutionizing the finance industry and all aspects of it. I think we hear a lot of people talking about how it can help firms improve their efficiency, help them branch out to new areas. People are using it in all kinds of ways in all aspects of business and finance and beyond. And because of that, I think it's going to be intertwined with basically every kind of operation in the future. So in that case, yeah, I don't think the concept of AI is going anywhere for potentially forever. But certainly this hype that we've seen throughout 2023, I'm sure the excitement surrounding AI is likely to die down. I mean, basically every event that we sort of covered last year, that most people, even if the panel wasn't about AI, they were talking about AI in some way, and everyone's excited to showcase how they're using AI and almost get that and use it as a way to get people interested in what they're doing because it is the latest kind of emerging technology. And I think one of the comments in the article that you're talking about, Michelle Moody, she explains that basically she expects AI will continue, but like I'm suggesting that the hype might die down, especially once new emerging technologies come into play, and they're the new sort of exciting thing that people are looking to use and showcase in their operations. So yeah, I don't think the hype around it can stay forever. Maybe the next time we have a big advancement regarding AI, I mean, I know ChatGPT always has a lot of eyes on it. If that has any huge developments in its next iterations, that might sort of revive the hype and bring it back to where it was before. But yeah, I think it's like almost impossible to think that AI will just disappear and won't continue existing in some form. But yeah, I'm sure the hype eventually will die down, and we will probably hear less about it, even though more and more firms begin to use it over the next year or so.
Yeah, I think it will be really similar to, sort of building on what you said, is probably, well, similar to challenger banks in the same way that they were all the craze for a while. And then as you mentioned, there will be a new technology which is mergers, which drives up the excitement, and people sort of forget about it and they fall to the wayside, but not to the point that they become irrelevant. I'm not going to say that's been the case with NFTs, but also maybe alluding to it a little bit. But I feel like it's more likely to be like challenger banks, and that AI is going to be here to stay, and that it will. I mean, it's like you said, it can't be the hype constantly. There will be more technologies, new technologies which emerge that will sort of take people by surprise, really, and be like, oh wow, this is a lot more impressive than I thought it would be. But nonetheless, I do think the fact that we are so early in AI's development, I think because it has such a scope to grow, each time a new milestone is achieved, I think it will revitalize that excitement around the technology. And to be honest, that could be sort of the end of 2024, the end of 2025, or it could be next month. It really could be. There's no timeline to determine when that might happen. It could be whenever. And I think that is almost what makes the AI as a technology so intriguing, really, and almost what keeps the hype alive.
Yeah, I agree. I think it's a good thing for AI that because it's branched out into so many different areas, we can talk about the hype returning for, like I said, another iteration of ChatGPT, or it could be that it's revolutionizing some area of finance or some area outside of finance that's changing how people interact with, whether it be their banking or payments or any kind of aspect of their life, really. And it's because it's branched out in so many areas, it can have development in any of them. And if anything's significant enough, then like you said, I think it could certainly revive that hype. And it's not just like one singular concept it's relying on to continue evolving. So yeah, I think all in all, I don't think we're about to hear or stop hearing people talk about AI for quite a long time yet.
No, I definitely agree. But if anybody else wants to, or if any of our listeners, I should say, want to read more about the topics we discussed today, head on over to thefintechtimes.com, where you can read more about these topics and many, many more. So moving on to our next section of the podcast, each week we have loads of news that crosses our desks, and there's always something that really sticks out to us, and it makes us think that, well, I didn't know this before, and we like to call this section What I Learned This Week. So Tom, what did you learn this week?
So this week I learnt via a new study from Autorec that 71% of UK and US banking institutions are concerned about their regulatory processes and basically believe that their financial control processes aren't robust or flexible enough to accommodate any regulatory change or scrutiny.
Very interesting. And what I learned this week is that Sainsbury's Bank has begun its withdrawal of its core banking business. So financial service products that it has will continue to offer, financial products that it will continue to offer in the future will be provided by dedicated financial service providers through a distributed model, and explain that this will not cause any immediate changes to the products or services that it provides to its customers. But yeah, no, it's been a very interesting few topics of conversation today, and hopefully next week we'll have Polly back. But yeah, Tom, thank you very much for joining me today, and thank you to all our listeners.
See you guys next week.
See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.